Hello traders, Gary Wagner here, just before 11 o'clock in Honolulu, 5 o'clock in New York on Tuesday, the 20th day of May 2014, and this is the daily report for gold and silver. We still have ongoing pressure in the equities markets, seems to be subtly supportive in the precious metals markets, with that complex trading higher across the board, only very nominally higher first to gold. 1294.16 current print on the screen puts it up roughly $1 on the day. The low 85.20, the high 98 even on the day, currently trading up $1 to $2 higher. Silver also trading higher, but very nominally, up about 6 cents on the day. 1939, that's our current print, and 1917 on the low, 1954 on the high. More on silver towards the end of the show. Traders, it seems as though support is holding, but holding by the rare skin of gold's teeth, so to speak. We're looking at a 480-minute chart, and in this 480, what we've done is we've created up our level resistance line from these most recent tops. Of course, tops I'm speaking about are here. You can carry it over to here. And then lastly, we see that on this last rise, it came close, but found resistance just prior to that. Now, on the bottom, I have added a line. My original line that I have put in here is a line that is based upon this low right here, and it is also based upon the low on the body of this low that we got when the market came down and touched down. I like to use the bodies because it gives us a more real sense of what the market's doing, because it takes out the difference between either the open and the close, depending on whether it closed lower or closed higher. And the bottom of these bodies, of course, give us that real range, the range between the open and the close. I've also added one that starts at the bottom but goes through the lows, as you can see right here and here. The reason being is we're right within this channel right now. We're back within above the upper support line, this support line here, but it was trading in that range, and we can see that. And so it's still, to me, valid as long as it doesn't break below the real resistance line, or the real support line, excuse me, which would be based upon the lows. And I do believe that the strength that you'll see is always got to be really within the bodies. So that to me is what's important, and we're still trading within this range, so we're still range bound. There's no doubt about that. Really, today's activity is as much due to a weak dollar as anything else, but we are still trading in a tightly consolidating market, and that consolidating market, the range continues to narrow. Now, in terms of what I believe to be current critical levels of support and resistance, what we have done is we've created a couple of different fib retracements, but the main fib retracement that we're going to concentrate on begins up at the top here. I believe we had 1391, if I'm correct. That's this top right up in here. And in terms of our bottom, comes in at around 1266 based upon this low right here, of course. When we do that, we develop ourselves a range, and if we take a look at the different areas that seem to be supportive and the different areas that are causing resistance in the market, we can see the following. First of all, the 50% comes in at around 1329. We've identified 1327 to 33 as a pretty critical band. We also, of course, have this particular top in the market, so we've got some good technical evidence that shows us that this is a real area of resistance. The second real area of resistance has got to be between, call it 1309 and 1314. You can see that here it's a 38% resistance level of this move down. And we also have this top right here, of course, as well as this top that falls just below that. Now, the 23% level takes us to just below 1,300 per ounce, and that's the area I believe that it's struggling with now. If we look at especially this small green body right here and these last couple of days, you can see that it has not, on a closing basis, been able to close at or above that particular point. And that's where our current resistance level is really holding from. Now, in terms of looking at support, as you can see, I have compressed this chart to show the second of these two retracements. This retracement is starting from 1341, so that first top that we had, this is our secondary top, 1392, that's right here. When we look at this particular retracement, meaning from 1431 down to 1177, or this double bottom, when we do that, we get an interesting number at 61%. The 61% retracement level puts us at 1274.63, and without a question of a doubt, on a technical basis, that is where we are currently deriving our support from, because when we look at this particular structure here, what we can see is quite obvious. And the obvious thing to me is that when we simply draw a band or an area just at and below this particular line, because you do have a low that comes in here, right in here, but when we look at it through these eyes, there's no doubt we have this market being quite supportive, and quite supportive in a couple of areas. You can see this bottom here, and then also here. You can see that when the market came down, it came close. Now, we have had a series of higher lows. We've talked about that. We have had this series of lower highs. So I still believe that we're forming some sort of a compression triangle. We talked about the fact that typically when you see this market bunched up, there have been occasions such as right in here, you get this kind of bunch, but for nowhere near the length that we've had. You get it right here a little bit where the market trades sideways. That's the interesting thing about gold, because with gold, typically what we've seen is as the market's moving up or down, in this example we'll say up, the market moves up, consolidates for a little while, spikes, consolidates for a little while, spikes, consolidates for a little while, and spikes. So even though we have periods of sideways trading within the market, that sideways trading is typically preceding and following a spike up. We're certainly not getting that. We had this move down, we had basically a move up, move back down, not really any sideways action, and then we began to define really the overall characteristics in gold as having 1314 on the high side in terms of resistance, and support being at around 1275. So we're still within this trading range, and this trading range continues to compress. So I think personally, at some point, we are going to see this market break, and it might just be that it's not going to break till June. As I've said on a couple of occasions, there's quite a few analysts out there that are looking at the seasonal tendencies of gold, and the fact that over time, when we look at how the market has traded, it has genuinely, in the end of May, kind of really stagnated, and it was really the beginning of June and July when the market would once again take off. We talked about looking at that on a couple of different years on yesterday's show, but really what we're seeing more than anything else is the market continuing to compress. So traders, more than anything else, when we look at a weekly chart, and that's what we have out on now, standard candlestick format, this is a chart where I have multiple fib retracements moving up and down the scale, or the market as it's been moving up and down. But really what I want to look at right now is, although we're slightly in the week, we're slightly higher, it's green, but it's in essence unchanged. Green, red, red, green, red, green, green, red, red. We've had these alternating candle colors. Now, obviously here the market came up off of the highs, and so we had a sell-off for 2 weeks. But if we look at the trading activity really over the last, 1, 2, 3, 4, 5, 6, 7, 8, almost 2 months now, you can see that it's in this tight band. And in terms of any kind of ultimate direction in the market, we would get that by looking at consecutive greens, consecutive reds, as the market either trends to new lower pricing or higher pricing. We get an indication of what direction the market's going in. We can honestly look at this market and say that the only direction's been sideways. We're getting alternating candle color, small-bodied candles. Now, the only real difference is if we convert it to a Japanese average chart. You can see here on our weekly chart, we've gotten these smaller and smaller bodied candles telling us we might have some sort of pivot point, but through the eyes of this filter, we can absolutely see that this market over the last couple of months has been slowly slipping to lower pricing, and at the same time, it's gotten a flat bottom. In other words, it's gotten support in this area, 1293 to 1275, we'll call it in that area. Here you have, these are those absolute lows, 1270 being right here. We try to make that as straight as possible. So you're getting a series of wicks that come into this lower band. Your body sizes, though, are all coming in at around, over the last month, at around 1300, but they are red, they are small bodied candles. So we still see the market under pressure, 1. 2, we still see support being built in this area. And then 3, we are getting on a weekly basis on our Japanese average charts smaller and smaller candles, which are indicating that this trend, even though this trend's been lower, it continues to get weaker and weaker. And in essence, it appears as though it's running out of steam to the downside. And of course, silver's trying to make some sort of a comeback here. My sense with silver right now, as you know, I've been neutral to very bearish in silver. Can't seem to get out of this range. The one thing that we can see is that we've had this series of lower highs as we have had in gold. We're also, if we take a look, we do have the market really consolidating somewhat in the same manner as gold has been. The key difference with gold and silver, of course, is when we look, especially beginning of the year, this market in silver traded sideways, had one tremendous spike, and then pretty much gave it back over the next month, whereas gold was slowly meandering higher and really had a nice rally at the beginning of the year. So that's where we're seeing distinct differences between the two precious metals. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.